Today, I'm going to go over 12 stocks in 11 industries that are paying me more than $10,000 in dividends on top of 63,000 year-to-date gains in the underlying equities. No more than 14% of the portfolio is invested in a particular industry to diversify the portfolio. Aflac, a life insurance company that pays a 2.48% annual dividend, is my first pick. Aflac has a track record of raising dividends and has consistently increased its dividend payouts in February each year since 2018. Aflac is up 15.25% year to date, and this is anticipated as life insurance companies are moderately inflationary resistant and generally do well during moderate inflationary periods. Cisco Systems, a communications equipment company that pays a 2.74% dividend, is my second pick. Cisco is up 23.04% year to date, and Cisco has been consistently paying dividends since 2011 and has increased its dividend payout several times from 6 cents a share in 2011 to 37 cents a share today. ExxonMobil, an oil and gas company that pays a 5.85% annual dividend, is my third pick. Exxon has been consistently paying quarterly dividends since 2013 and is currently paying a dividend of 87 cents a share. Exxon, to its credit, has been getting leaner and more efficient while maintaining its upstream and downstream capabilities. Exxon is up 43.45% year to date, and this is a reflection of investors' faith in Exxon making the right business decisions to right its ship as Exxon navigates the post-COVID oil and gas landscape without cutting its dividend. Goldman Sachs, a banking and capital markets company that pays a 2.14% annual dividend, is my fourth pick. Goldman Sachs has been consistently paying quarterly dividends since at least 2013 and recently announced its decision to hike quarterly dividends from $1.25 a share to $2 a share. Goldman Sachs typically is not included in a high dividend yield portfolio, but Goldman Sachs numbers and metrics were just so amazing when I analyzed Goldman Sachs that I had to include Goldman Sachs in my portfolio. Goldman Sachs is up 41.48% year to date, significantly outperforming market gains. Stocks that I would consider if I'm more focused on higher dividend payout include Citi or a Canadian bank. IBM, an information technology company that pays a 4.69% annual dividend, is my fifth pick. And IBM has been consistently paying quarterly dividends since 2011. IBM is up 12.81% year to date. IBM has been shedding much of its excess weight over the last several years, and the present day IBM is a much leaner and more efficient company with a clear focus on hybrid cloud and AI computing. Further, IBM is one of the few technology-related companies that pays a dividend greater than 3%, thereby making IBM an attractive investment for dividend investors looking to diversify into technology. Lockheed Martin, an aerospace and defense company that pays a 2.76% annual dividend, is my sixth pick. Lockheed currently pays a dividend of $2.60 per share. And over the last 3 years, Lockheed has hiked dividends by 20 cents a share every year in November. For the year, Lockheed is up 9.34% year to date. And in the current geopolitical environment, the defense business will not slow down anytime soon and will likely pick up due to ongoing geopolitical tensions. And this is evident by Switzerland's recent $35 billion order of Lockheed Martin's F-35 fighter jets. Lowe's, a home improvement company that pays a 1.66% annual dividend, is my seventh pick. Lowe's has consistently raised its quarterly dividends in July each year since 2013. Lowe's is up 20.18% year to date, and the stock will likely continue its uptrend due to high home improvement and home construction demands. McDonald's, a food and beverages company that pays a 2.18% annual dividend, is my eighth pick. McDonald's currently pays a dividend of $1.29 per share, and over the last 8 years, McDonald's has hiked dividends once a year in November. For the year, McDonald's is up 12.8%. As we exit the pandemic, indoor dining will pick up pace, which would further increase McDonald's top and bottom lines. An alternative to McDonald's is Coca-Cola, which has a higher dividend yield of 3.1%, but is only up 2.6% year to date. Microsoft, a software company that pays an annual dividend of 0.79%, is my ninth pick. Microsoft currently pays a dividend of 56 cents per share, and over the last 11 years, Microsoft has hiked dividends once a year in November. Dividend investors may scoff at Microsoft's relatively low 0.79% dividend yield. However, dividend investors need to account for Microsoft's superior 29.78% year-to-date gains and a whopping 397% gains over the last 5 years, which in my opinion is a good compensation for low dividend yield. Moreover, any company that gains almost 400% in 5 years is not going to be able to keep up the dividend yield simply due to the sheer amount of gains to the underlying equity. Pfizer, a pharmaceutical company that pays a 3.9% annual dividend, is my 10th pick. Pfizer has been consistently raising its quarterly dividend payout amount in November since at least 2014. Pfizer is up 8.53% year to date. However, with a global shortage of COVID vaccines and Pfizer vaccine generally being considered as the best vaccine available, many countries are lining up to purchase Pfizer vaccines. Moreover, in addition to manufacturing COVID vaccines, Pfizer products such as Prevenir, Ibrance, and Eliquis each generate at least $4 billion of revenue a year, making Pfizer a very profitable company. Philip Morris, a tobacco manufacturing company that pays a 4.82% annual dividend, is my 11th pick. Philip Morris's products such as Marlboro are sold in over 180 countries, and Philip Morris has been raising its dividend payout once a year since 2013. Philip Morris is up 22.16% year to date, and Philip Morris benefits from operating outside of the US, where many tobacco laws are less stringent than US laws, and where tobacco products have less a negative connotation, and where a greater number of international population use tobacco products. Prudential, another life insurance company that pays a 4.49% annual dividend, is my 12th pick. For the year, Prudential is up 30.48%, almost doubling the S&P 500 year-to-date returns. This is again anticipated as life insurance companies are moderately inflationary resistant and generally do well during moderate inflationary periods. I have included a link to another video where I provide more detailed analysis of most of the 12 dividend stocks that I picked. Feel free to click on the link if you are interested. This spreadsheet provides another breakdown of my dividend portfolio. As you can see, the underlying equities have gained $63,654 year to date, or a 23.72% year to date, outperforming SPY, the most heavily invested S&P 500 ETF, by 6.14%. Further, the average annual dividend yield of this portfolio is 3.03%, more than double the 1.3% annual dividend yield of SPY without incurring any management fees. The current annual dividend payout of this portfolio is $10,057, or $838 per month. Further, with dividend reinvestment, which I strongly recommend, the dividends are reinvested into the underlying stocks, thereby adding to my holdings of the respective underlying stocks. If, however, you are interested in achieving even higher returns, then feel free to click on the link I provided if you want to check out my other series where I utilize more risky strategies to 10x and 50x my returns. Let me know your dividend investment strategies and which stocks you have in your dividend portfolio. As always, thank you for watching, and please check out my other videos on stocks, options, futures, and crypto trading.